Rina ji,
You can start,
please,
Rina ji.
Good evening, ladies and gentlemen. Thank you for joining us today for a webinar on the topic Global Trends in the Internal Audit, a look ahead, hosted by the Sonprat branch of NRIC of ICI under the aegis of Internal Audit Standard Board of ICI. Before we go ahead, I would like to thank you CA CGS Nanda ji, Chairman, CA Gyanchandra Mishra ji, Vice Chairman in his absentia, and the entire team of IASB for their persistent efforts in bringing professional updates to our doorstep. In today's VCM, we have CGA CGS Nanda sir, Chairman IASB, ICI, CA Gyanchandra Mishra ji, Vice Chairman, Internal Audit Standard Board of ICI, CA Amit Kumar ji, Chairman of Sonprat branch of NIRC of ICI, and our worthy speakers, CA Harsha Ramnani ma'am, CA Deep Kumar ji, and CA ANL Madhavan sir. Now I would request CA Amit Kumar ji, Chairman of Sonprat branch of NIRC, to take over for his opening address.
thank you, Rina ji. First of all, very good morning, everyone. I, CA Amit Kumar, Chairman of Sonipat branch of NIRC of ICI. First of all, I would like to thank you, CA Saranjot Singh Nanda sir, CCM and Chairman of IASB Committee, and CA Gyanchandra Mishra ji, CCM and Vice Chairman of IASB Committee in his absentia, for organizing important VCM on global trends in internal audit. A look ahead, which is very relevant in today's scenario, and give us opportunity to host this wonderful program. We have galaxy of eminent speakers: CA Harsha Ramnani ma'am, CA Deep Kumar Mandirata sir, and CA Anil Madhavan sir, who have tons of experience and knowledge and ready to impart their knowledge with all of us. I can say about internal audit that internal audit provide management and board of directors with the value-added service where flaws in a process may be caught and corrected prior to external audit. IASB committee doing wonderful job by conducting regular programs on important topics, even on the last due dates under the CMS of Nanda sir. I would like to welcome and hats off to everyone for joining today VCM, even on the second and last day of non-audit ITR cases. So without taking too much time, I would like to hand over the dice to CA Rina ji to take this VCM forward. Thank you.
Thank you so much, Amit ji. Before I request for the keynote address, let me take this wonderful opportunity to introduce CA Charanjot Singh Nanda sir, who does not even require any introduction. We are privileged to have you, sir, in our company today. Thank you for taking time out of your busy schedule for this webinar. Mr. Nanda sir is a true leader and a mentor to many students and members alike. He is presently serving as a chairman of Internal Audit Standard Board of ICI and Digital Accounting and Assurance Board, and vice chairman of Banking, Financial Services and Insurance Committee. He served as chairman, vice chairman, and member of almost all the committees of ICI during his professional journey. He served the nation and profession in various capacities as well. He has worn many hats as a council member over the last 2 decades and is an inspiration to the entire community. Now I request CA Charanjot Singh Nanda sir to take over for the keynote session.
Thanks a lot, Rina ji, for a wonderful introduction. The chairman, Amit Kumar ji, Sonipat branch, thankful to you for hosting this. I can see on the dais CA Harsha Ramnani from Jaipur, CA Anil Madhavan. We also have Mr. Deep Mandirata, who would give his impetus on today's program. I can see a number of people from our office, including Ayaz from the technical support, Surbi Tyagi, Shani Nigam, and Arun Agarwal, the coordinator of this program. Ladies and gentlemen, my hearty congratulations for joining this great program. Let me very candidly put across that your board, the Internal Audit Standard Board, is totally involved in giving latest programs on every Saturday. I want to very candidly put across that our focus of honing the technical skills of members is at the highest level, and we ensure that we give best of the speakers from various backgrounds so that you can have ideas across the corner. You are all aware, ladies and gentlemen, that internal audit is essentially a management function. And it is a sunrise industry in today's time. Any industry audits may go, but internal audits have to increase because it is changing on a day-to-day basis. And therefore, information, discussion on daily topics is very pertinent. Give me a second before I put across my PPT on today's keynote. Hold for a second, please. Is my PPT visible?
Yes, sir.
Great. So today's coverage would include internal audit, continuous risk assessment, standard on internal audit SIA 230, which is objectives of internal audit don'ts versus do's. So first is continuous risk assessment. I want to tell you that I got a call from a gentleman who said, Mr. Nanda, I'm looking for any work, any business, any vocation where there is no risk. I smiled and said, my friend, I'm a chartered accountant of 32 years experience. I could not find any such area where there is no risk. And further, where there is no risk, there is no reward. Where there is no risk, there is no return. Where there is no risk, there is nothing that could come to your rescue. And therefore, we all have to take risk, but a calculated risk. So internal audit is continuous risk assessment, matching the risk appetite of the board or the audit committee to which you may be answerable. And how do you start it? You start with evaluation. Evaluating the business strategy with the goals set so that you understand what is the optimal risk appetite which you can take. Stabilizing supply value chain via collaboration with vendors. You have everything in control. So no supply worries. Technological advancement and digitization. Again, a very great area, very important area. Enhance consumers' value proposition. The consumer is the king and you work only to serve the consumer and therefore you have to enhance their value propositions. Improving financial strength. The financial strength of the organization always needs to improve. Safeguarding workforce and new ways of working. Innovation technology is something that can change the entire thought process. Restructuring companies' risk management framework, which is again very important. The appetite of risk is essentially the job of the management. But you have to see that that risk which they are taking is optimal. That will get you the best of the returns in times to come. Risk of frauds due to changes in process and working of arrangements. Yes, you know, with advent of technology, so many cyber frauds have stepped in, and therefore you have to understand that due to changes in policy or working conditions, there are so many frauds that may come in. And therefore, the first topic, continuous risk assessment, is very, very important. The second topic of the day, it is standards on internal audit, SIA 230 objectives of internal audit. Now, what are the purposes of defining objectives of internal audit? Number one, documentation. You need to document the formation and functioning of the internal audit activity in terms of the outsourced internal audit arrangement. Yes, when you are doing an internal audit, the objectives need to be evaluated on a daily basis. You need to understand how we provide clarity to the auditor and its stakeholders regarding the nature of the internal audit. Very, very important. You need to ensure that the linkage between what is expected of the internal audit and how those expectations are met. There's always an expectation gap, and how that is bridged is very, very important. We need to promote best practices in internal audit, such as operational success, such as areas which are accountability, or roles and responsibilities of auditors. And then when you do this, you create a wholesome environment where internal audit is taken at the highest level. Now, coming on to the last topic of the day, internal audit do's and don'ts. Yes, what do? You do proper audit planning. Yes, you need to have sufficient and appropriate documents to ultimately go back and establish that what you are reporting is based on certain technical areas. You have to communicate with the management each and every concern, give them high-risk areas and give them time to respond. You have to have previous audit reports from where you can draw your inspiration, how you have to work, and what are the fallacies of the management. You have to have proper recording of issues so they can be taken into account whenever time arises. You have to fix the scope of internal audit and work essentially as per that scope. And if there are some scope exemptions, you need to identify and document in the report itself. Now, what are the don'ts? The first don't is shortage of staff and delay reporting. Please don't get less staff and please do not delay the reporting. It has to be on time, because report delayed means report denied. You don't get the benefit of it. Collect additional documents. Yes, additional documents so as to collide what you intend to establish. No issues may remain unsolved. All issues may be there which are resolved and form a part of the report. Don't influence the outcome of the report. The outcome of report is very natural and it has to move in this direction. You have to always understand that repetitive comments and general comments have to be avoided. It has to be very small. The executive summary should bring out whatever you intend to have. And more importantly, the audit coverage has to be very precisely taken into account. You need to know how much you want to do. So, ladies and gentlemen, I will not take much of your time. We have our rest of the speakers coming here, and therefore I would like to come back on my screen and tell you that we have high expectations from this program, and the speakers, Madam Harsha Aramnani, C. Anil Madhvanji, C. Anil Mehdi will do total justice to this program. I wish this program a great success. Over to Madam Reena Singla for her further comments. Madam, the dais is all yours.
Thank you so much, sir, for your valuable words. Now, before starting our technical session, Internal Audit Continuous Risk Assessment, I would like to introduce our speaker, C.A. Harsha Ramnani, ma'am. She is a fellow member of the Institute of Chartered Accountants of India and has done Diploma in Information System Audit and has commenced a graduation from Jaipur with rank 1. She is also a registered valuer for securities and financial asset class and have certification in forensic audit and fraud detection, concurrent audit of banks, NDAs, business responsibility and sustainability reporting, and public finance and government accounting by ICI. She is having over 12 years of post-qualification, front-to-end experience and exposure as an auditing expert in various industries. She is a regular faculty and trainer for the orientation training program and an active member of the various institutions as well. Now, I request Harsha ma'am to take over for the technical session.
Thank you so much, Reena, for the nice introduction, and thank you so much, Internal Audit Standard Board, CS Nanda sir, and the entire team of this webinar to providing us the opportunity to be a part of this wonderful program. And I would like to start my presentation now. So for today's first technical topic is internal audit, a continuous risk assessment process. As Nanda sir started and with his keynote sessions, he stated very clearly that internal audit is very important, domain in terms of the practice and in terms of it has very importance in terms of working. Without, I think, internal audit process, it is very difficult for any organization to, have a sound system, business system, sound accounting system, and sound ecosystem in their organization. And probably it is very difficult for the management to manage all the activities simultaneously. So the internal audit, continuous risk assessment is a very important aspect in today's era. So first question in each and every mind is why internal audit? Why this particular internal audit is important for each and every organization? So let me start with the importance of the internal audit. Internal audit is actually very essential to maintain the operating effectiveness, efficiency, and the financial reliability and the safeguard of the asset. Without internal audit function, maybe it is very difficult for an organization to maintain their operational efficiency, to maintain their financial reliability, and to safeguard their assets. It is actually a tool that provides assurance to the stakeholders of the company for regarding their risk management, regarding governance, regarding the internal control process, that all these particular aspects are operating effectively. How it helps? It's helped to increase productivity. How an organization can increase their productivity? It can increase by continuously monitoring and reviewing the organization process. Internal audit normally regularly review the organization processes, their standard operating processes that the particular organization following up. Second, evaluate risk and protect the asset. How? It will help an organization to track and document any changes that have been made to the environment and ensure the mitigation of found risk. It is very, very important to mitigate the found risk on the same time. So the frequent internal audits or frequent internal audit function can help the organization to document and track the changes that is happening in the environment. And the last one, we can say that the quality control that helps the organization to maintain their well system and processes to keep the company goals on track. Each and every company has their own set of goals that works for the specific goals. So internal audit function helps them to keep their goals on track, and also providing the consulting to improve those system and processes. If the organization has an independent internal audit system that gives the unbiased view, that is very effective. But if organization has a limited resources, they can't, have a independent internal audit team or independent internal auditors, then they could have a cross-trained employees in the their organization to audit each other department to make a significant impact on part of internal audit. Again, it's help to the good corporate governance. Internal audit actually helps to evaluate the company's internal controls that includes the corporate governance and accounting processes, and that give the assurance to the stakeholders that company has a good corporate governance and company has a good internal control system. So this is why the internal audit function is actually very important for any of the organization, whether it is in a mid of their age or it is already a established organization. So in terms of why in regulations internal audit is important, it is actually recognized all over in our financial statements and the non-financial part. In director responsibility statement, we have to mention as a director of the company that in case of listed company has a sound internal financial controls that are being followed by the company. In audit committee, section 177(4), every audit committee shall act as in accordance with the terms, and that includes evaluation of internal financial controls and risk management system. So again, audit committee also has the responsibility regarding the internal financial controls and the risk management system. And in audit report, whether the company has adequate internal financial controls. As we all know that for certain class of company, for each and every listed company, and for the private limited company and the unlisted companies, for certain companies with a limited threshold, company has to, statutory auditor has to give the IFC report separately in section 143, where the auditor has to comment upon the internal financial and operational control effectiveness, efficiency, and their accuracy and operations. So now it is very important for the statutory auditor as well that whether the company has a robust internal audit system or internal control system or not. And from the financial year 21-22, or we can say the audit we are doing right now, there is a dual responsibility on a statutory auditor in terms of the internal controls and internal audit, where with IFC report, he has to comment on the internal audit system in CARO report as well. In CARO 2020 also, there is a clause where statutory auditor has to comment upon the frequency of internal audits and the scope that has been covered by the internal auditor. And second, he has to comment whether he has, the statutory auditor has accepted the internal audit report or not. So we can understand the importance of the internal audit by all these, regulation requirement. Earlier, it was like statutory audit was more important rather than the internal audit, but now the scenario is little bit changed. Internal audit is equally more important in terms of the regulation as well, because now regulation also required the confidence on the internal control system of any entity, and they are asking to comment the statutory auditor upon their internal control system. So now, as we have this particular webinar on the global trend on the internal audit, so what are the future trends in the internal audit? See, the internal audit function that was working in past, it was like little bit the manual audit, little bit, manual exercise in each and every process to identify the issues, to identify the observation. But on the progress, with the progress of the time, the process, the methods to follow in an internal audit is also changed. Now there are the different tools, there are the different aspects that we use when we are doing any kind of the internal audit. It is actually linking with the innovation. Internal audit is a aspect or the domain where, as an auditor, as a consultant, as chartered accountant, we can do many innovations, and there are significant innovations are also in already there are some major trends that we can follow or we can understand by current scenario, that agile IA. It is, past when we were doing the specific, process to process audit. Now it's a time where we follow the agile IA. We follow the integrated assurance. We understand the importance of the cyber security, the workforce of the future, and my topic actually, the continuous risk assessment and automatic assurance. These are some major trends that we can see in the internal audit systems, internal audit processes. And for the further session, maybe I am more focused on the continuous risk assessment part. So what is continuous risk assessment? So the continuous risk assessment is actually a continuous process where we are monitoring risk regularly, we are assessing risk regularly and tracking that can help the internal audit to direct its resources where they are most needed. In today's time, where we have very less resources in terms with the limited resource workforce, we need to understand where we need to focus more. So with the continuous risk monitoring, assessment and tracking, we can actually direct our resources where in particular process they are needed most. It is actually a valuable departure from the rotational audit plans. The dynamic audit actually helps the stakeholders. They enable, give them the confidence that we are working 24/7 in terms of the identifying new risk, in terms of assessing the already existing risk. There, what kind of the particular things that can organization need to take care, the real-time risk monitoring actually, and that we are doing with a technology-enabled risk sensing, analytical and visualization tool. So why it is important, why continuous risk assessment is important? It is important because with a fast moving world, we can't do the audit on a yearly, on a half yearly basis. It needs a frequency need to be increased. Without increase in frequency, it is very difficult for any of the organization or any of the consultant to give them the appropriate guidance, to give them the appropriate consultancy. So instead of yearly or a half yearly reporting, because when we are doing yearly or half yearly audit, it is like, your final report is actually outdated. It is actually a post-mortem report only, and maybe not more relevant for the board or the company. So it needs to be reviewed frequently and, on a real-time basis. So that, that new events that might occur change in the whole picture. It can help the organization to understand what is important right now and what kind of the change they need to implement right now. So more specifically, what particular continuous risk assessment part for the internal audit plan, it is to adapt new risk, whatever the new risk company can face. It increase our accuracy. It reduces the pressure on the company as well as on an internal auditor. It improves collaboration, and it actually satisfy or to make a comfort to their stakeholders of the report or its stakeholder of the processes. Let me explain each process in detail. So first one is to adapt the new risk. as we all know, 2020 was very difficult for all of us. It was very sudden for us, a global pandemic that hits the all over the country, including with a globe. So, and other, we can say that the supply chain bottlenecks we faced, the labor issue we recently faced, the inflation part we are right now facing, the international war right now we are seeing, and several other challenges that are very frequent and that are very occurred in very relatively short period. So if these kind of the new risks are occurring in very short period, and so as a consultant, as a company, as an organization, we need to work very fast, we need to work very frequently. So just to adapt these kind of new risks, these kind of no specific aspects regarding the organization, what is the impact on the organization, a frequent internal audit function or the continuous risk assessment function helps the organization to make them a right decision for the particular risk, how this risk is impacting them, what kind of the mitigation plan they need to follow, and how they can prevent them with all these kind of risks. So it is very important to have a continuous risk assessment for the new kind of the risk challenges the company can face in future, or to make them enabled how to face them and how to mitigate them. The second one is increase accuracy. It is actually increased our accuracy. For example, if we are doing the audit on a yearly basis, on a half-yearly basis, it is actually a post-mortem kind of audit, as I already stated. But if we are doing the continuous risk assessment, if we are doing frequently, regularly our function with a process to process, it actually helps to increase our efficiency and increase our accuracy of control testing and overall risk advisory. For example, in terms of the cyber security risk, maybe annual business plan has a certain type of controls that how software permission to be employees, but due to change in circumstances, due to change in the environment, company needs to change their policy, company needs to change their things. So if they are changing the control things, then it is required to regular their review as well. Because if we are reviewing that on a half-yearly basis or on a yearly basis, it is very difficult to make a perfect. It is very difficult to make reference. We are referencing the outdated controls, and we are not comparing them with the continuous audit permission. So the regular or the frequent audit function, the continuous risk assessment, help us to make accurate observations and make effective observations. So third one is actually very important for each and everyone on these days, as we all know that there are so many things as a chartered accountant, as a consultant, we need to manage, we need to maintain. So initially, maybe you can find that if it is a continuous risk assessment, if it is a continuous, work, how it can reduce the pressure, it actually increase the pressure, but it is not like that. It is actually help us if we are doing this function regularly, because ultimately it will ease our burden on a yearly basis, and it we can do regular exercise process by process. We can maybe more focused on the specific process where we can find the specific any kind of, we can think that there is a risk specifically, and maybe it gives stakeholders also a chance of the continuous monitoring. So over the period of time, initially it might take more your time to establish the process, but later on a regular aspect basis, it will actually reduce your pressure of the work. It will make a smooth cycle for a consultant, for an internal auditor as well, and for an organization as well, and it will make ease for the stakeholders, for the users of the report to discuss about the things, about the findings, about the outcomes, and a real-time feedback might help the staff as well to recalibrate with along their way, and the particular organization as well to work upon the specific aspect on a real-time basis. And yes, it will also help the staff performance as well. It will give the company a real picture and it will help them for their staff performance review as well, because it again on this current time period, it is not a kind of yearly exercise. It is the exercise that is the ongoing basis, and it is a real time basis. So it actually helps the organization to have real time picture of each and everything, each and every organization and each and every process, if we do the continuous risk assessment of any particular process. So it improves collaboration. How it can improve the collaboration? See, each and every organization has a different departments, and each and every department has their specific task, specific KRA. But the organization work with each and every support of each and every department, each and every processes. Without support, without collaboration of each process, it is very difficult for any kind of the organization to have a smooth
recording
run of
stopped.
business. So another reason to have a dynamic risk assessment is to improve the collaboration amongst the department of the companies. Internal audit teams actually, often look at the several areas such as financials, regulatory, the operational risk, and each of which might require the working with separate business unit. But doing the dynamic risk assessment of all the areas can give the company and the organization a full picture of the organization risk factor. It will give you the complete picture what is the status of the organization right now, and will help the organization, will help the stakeholders to take a decision on a right time, that how different departments can collaborate with each other for the effective use of resources. So it is actually helping the organization to collaborate in a more effective manner. And yes, the collaboration should not be limit by the once in a per year. It should be the continuous exercise that organization can opt for their particular benefit of business. So the last one we can discuss in a continuous risk assessment is the satisfy stakeholders. Obviously, each and every function that we are performing is for the stakeholders of the company, stakeholders of the organization. And particularly what I personally understand is continuous risk assessment actually give the satisfaction to the stakeholders of the company, because it is regular monitoring, it is a real-time monitoring, and stakeholders can rely that on a 24/7 basis the company is on monitoring. Each and every business function is under monitoring, and there is less chances, there is less frequency, maybe the kind of specific risk can occur, or if any risk we are identifying, that can be mitigated on a time, within well time. So it is actually for the comfort of the stakeholders of the company, the shareholders of the company, the management of the company, that gives particularly say that they are more up to date with the view of the risk on their own terms, rather than waiting for the annual assessment. So these are some major trends we discussed just on a continuous risk assessment aspect, because the internal audit function that we are discussing is the kind of thing that particularly earlier it was not like taken up on a very right spirit, I think so. But now on particular this time, after financial year 21-22, the importance of internal audit is increased much more higher than from the past, because now the statutory auditor is again as statutory auditor has a dual responsibility to comment upon the internal control system. They can't do the internal audit, so there is the importance, there is a particular what we can say like focused on the control system of the organization. And when we are in the developing era, our country is also in a developing and very fast moving, industry is very fast moving, all industries. It is very important for each and for all of us to have, regular review, regular risk assessment for any organization. Because if we are doing all exercise, all working half yearly or yearly basis, it is very difficult for any kind of the organization or any consultant to give the real picture, to give them the real consultancy, so that effective consultancy actually, what is more important for the company and what is more effective for the company. So that was on part of the continuous risk assessment. And when it's come to the risk assessment, what we say, the risk assessment exercise is actually very specific exercise that have a particular process that an internal auditor needs to follow. When we say what kind of the process the internal audit need to follow, it is first step the internal audit can have for any kind of process is the risk identification process. The process he is following, or the team is following for the risk assessment, they need to understand that we are here to identify each and every kind of risk. Risk can be, kind of already the risk we have seen in other companies, in other organization, or any new kind of the risk. So updation is more important for us as well. And when we identified the risk for a specific process, for a specific area, we first need to discuss that particular risk with the particular department to understand whether we have a clear or understanding for particular process, or whether we have a clear understanding or not. And then we can give a picture of all risk assessment, where what is the impact of that identified risk, what is the how we can mitigate that particular risk, and then we can give the solution to the company, to the process, that how they can manage their all risk in company and organization, and can keep their goals on track, keep their company's objective on a track, so that company can work smoothly and stakeholders have their confidence on their all processes. So it was on my part on a major trend. Actually, I completed little bit early, but yes, I'm open for some questions if we have, or if we want to understand anything on any particular topic in terms of the continuous risk assessment. Tina, do we have any queries or?
Yes, ma'am. We have a query from Mr. Satyanarayan Khandelwal, that how to make the clients understand that internal audit is not just a financial audit, and make them able to accept the observations identified related to operational effectiveness of the company.
Yeah, it's actually a very good question, because when we discussed about the internal audit function with the prospective client as well, sometimes clients take it as a like ye vouching iske andar hame karna hai. It's a kind of vouching function only, or it's kind of again ticking function only. Internal audit is actually not a ticking function. It is a testing of internal controls, established internal controls in an organization. As an internal auditor, we need to understand, and we need to make organization as well understand that the internal controls are not always the controls for the financial aspect. It can be on a operational aspect as well, and operational aspect is very important for any kind of organization. So it is a testing of controls that has been established by the organization. It is a testing of financial as well as operational controls. It is not a testing of only financial controls. For example, it is not kind of like the cash bank if we are doing. So who is approving the cash transaction? Who is approving the bank transaction? It is actually a testing of when we have a purchase system, when we have a sales system. So how the requirement is generated in the organization in a particular purchase department, how a store department evaluated the purchase is, requirement is genuine. When requirement is genuine, then how we identified the vendor for that particular requirement, how we identified that to whom we need to, get a supply for particular item, and then all other financial aspect that we are receiving the material and then bill passing. After that, the financial aspect started. So it is a internal audit is actually a function for testing of operational controls as well as financial controls. And when how we can convince our client and how we can make them understand, we need to, we can make them understand by the flowchart system, by the process narration actually, because it is again a very crucial aspect that how particular process, how particular department works specifically, and how your organization is following the SOPs, whether there are any kind of SOPs or not. It is not mandatory to have a written policies, it's written operating procedures. If company has established system that is followed, it is also okay, but whether it is as per best of industry practice or needs improvement. So we need to sit with the process owner, with the department owner. We need to make a process narrative, we need to make a flow chart, and then we can make them understand why and how the operational controls are important for them to make a for effective financial statements as well.
No more questions yet, ma'am.
Anything else, Reena, if you want to ask?
No, ma'am. Thank you so much for such a wonderful session.
It was actually a very, particular, I, made few slides for the countries, because we all understand why it is more important for us a frequent audit rather than to have an annual or a half yearly audit. And then, as I already said, that now it's important for each and everyone. For us now, it's in last year that in Karur 2020 as well, it is introduced for the comment for the statutory auditor to comment upon the internal audit frequency. So organization need to review their frequency of the internal audit, need to review their scope of the internal audit to make them more effective, to save them qualification in a Karur report.
Obviously, ma'am, we even all gain too much knowledge and explore the new topics, and we gain some advantage in our learning.
Thank you so much, Reena. Thank you.
Thank you so much, ma'am. Now, with moving ahead with our second topic, I would like to introduce our next speaker, CA Deep Kumar Menditra. He is experienced chartered accountant working to make good sense of governance, risk management, internal audit, and internal controls through his service delivery. He is fellow member of the Institute of Chartered Accountants of India and have a diploma in information system audit from the ICI and professional certifications in Forex and treasury management, forensic accounting and fraud detection, anti-money laundering, and ERP concepts and applications from the ICI. He is having experience in audit, assurance, consulting, fraud investigation and advisory services in the domain of governance, risk management and compliance across different industry sectors in the Indian market. Now I request CA Deep Kumar ji to take over for the technical session on standard on internal audit SC 230 and objectives of the internal audit.
So my screen is visible to you?
Oh, yes, sir.
Yeah. Thank you, Reena, for the introduction. So I'll start with my topic today, which is objectives of internal audit. And the way I have structured this is on the similar lines to what is there in the SIA. So I have 5 broad sections which talk about, let's say, first the introduction, then the objectives, then some of the requirements of the SIA, then some of the explanatory comments, and some annexures which have practical examples to to support the topics that we are going to discuss. So primary topic is SIA 230, objectives of internal audit. And first, I'll start with the introduction. Anything new or anything that we want to pick up within internal audit or outside internal audit, we generally start with these 6 questions. So anybody who is doing internal audit will be familiar with these 6 magical questions. So who, what, why, when, where, how. So who is supposed to do, what he is supposed to do, why he is doing it, when he is supposed to do, where he is supposed to do that activity, and how he is supposed to do that activity. So that is something which is related to every business process you would see. And that is what I've taken as a premise for, simplifying the SIA 230 for today, which is objectives of internal audit. So we start with the SIA 230. So it says The Standard on Internal Audit 230 Objectives of Internal Audit issued by the Council of Institute of Chartered Accountants of India should be read in conjunction with the following, which is Preface to the Standards on Internal Audit, Framework Governing the Internal Audits, Basic Principles of Internal Audit issued by the Institute. Why I have taken this premise of the preface is because it links back to three other things in other standards or within the framework. So I just want to link the entire story why the SA 230 is important and where it links back to the business, where it links back to other standards, and where it links back to the overall structuring of the SIA. So preface to the Standards on Internal Audit, it says the framework governing internal audits. Just a second. Is an overarching document to be read along with this preface. It talks about 4 components of internal audit. One is the basic principles of internal audit, then the key concepts, then standards of internal audit, and then the guidance. So it says SIAs shall be principle based which clearly outline the objectives of the issuing particular standard and the essential requirements for its compliance. The essence of each standard or the SIA is captured in the following sections. One section talks about introduction, second talks about the objectives, then the requirements, then there are some explanatory comments on the implementation and application of the SIA, then there is an effective date for the SIA. So this is typically the 4-5 components where how all the SIAs are structured. Let's say introduction to, it gives the brief background about the scope of the standard and its applicability. Then objective, reasons for issuing the standard and why that particular standard is required. So we'll be focusing on SIA 230 today, which is what is the objective of internal audit, why that particular standard is issued, what are the requirements of that particular standard, and if there are any explanatory comments or what those comments require in terms of the implementation and application of that standard. So this is just a preface to what we are going to discuss today. So the framework governing internal audit, first things that it talks about is the definition. So it says internal audit provides an independent assurance on the effectiveness of internal controls and risk management processes to enhance governance and achieve organizational objectives. Now we had Nanda sir talking about, evaluating strategy with goals. He spoke about technology, he spoke about continuous risk assessment, goals, risk appetite. He spoke about workforce, vendors, consumers, and so many other things that are linked back to the business. But essentially, if you read the definition of internal audit, it says internal audit provides independent assurance on the effectiveness of internal controls and risk management processes. And there is a clear objective. It says to enhance governance and achieve the organizational objectives. Now, there was one more question which came from Mr. Khandelwal. He said that how do we, make the client convinced about the operating effectiveness of the business, of the company, or as business as an overall? I'll try and answer that question through practical examples and sticking to this definition only. So what this definition primarily says is that internal audit is an independent function, whether it is respect to the position, the organization structure, or the reporting hierarchy. And then internal auditors do play a role which is advisory in nature. And that is something which does not compromise the independence of the internal auditors. So these are some of the, principles or, definition points which are laid out in the framework which governs internal audits. And then it also says that internal controls and risk management are integral parts of management function and business operations. So what I'm going to do is I'm going to pick out these words from these definitions and share some practical examples with you, how these relate back to the business scenario wherever you are doing an internal audit. So what I've done is just made these words into bold and italics so that for reference, I will be picking out on these words and then elaborating with practical examples. So we'll start with the definition. It says internal controls and risk management are integral parts of management function and business operations. An internal auditor is expected to evaluate the design and operating effectiveness of internal controls and risk management processes, including the reporting processes as designed and implemented by the management. So it clearly says that design and implementation of these things is the responsibility of the management. Where the internal auditor comes in, he comes in for an independent assurance on these particular items. Then it says governance is a set of relationships between the company and its various stakeholders and provides the structure through which the company objectives are achieved. Again, it talks about company objectives. It talks about the relationship with certain specific stakeholders. It talks about, structure through which the company objectives are achieved. It includes compliance with internal policies, procedures, laws, and regulations. It's a very specific definition, has specific words which are very thoughtfully chosen. And it says that organizational objectives incorporate the interests of all stakeholders and include the short and medium term goals that an organization seeks to accomplish. So this is just an overview of what the framework talks about, and we'll go into specific examples how that framework works in practical application in practical life. And then we go back to how this definition of internal audit has come into being. So there is a code of ethics which all members are aware about, and there are certain basic principles of internal audits which all internal auditors are aware about. There are some key concepts which go into this. There are standards on internal audit, and then there is a guidance to back that standard. Based on all these, there is a definition of internal audit, which I showed you on the previous slide. It just says that internal audit provides independent assurance on the effectiveness of internal controls and risk management processes to enhance governance and achieve the organizational objectives. We'll move forward on that definition. And then there comes, some basic principles of internal audit, which, again, the preface and the framework talks about. It talks about basic principles as independence, integrity, objectivity, due professional care, confidentiality, skills and competence, risk-based internal audit, systems and process focus, participation in decision-making, sensitive to multiple stakeholder interests, quality and continuous improvement. And if you look back at these, all these or most of these were addressed by Mr. Nanda in his keynote address. So in a nutshell, there are certain basic principles, and then there are key concepts to back those basic principles. What are those key concepts around? Those are around internal controls. Those are around risk management. Those are around governance processes. Those are around compliance with laws and regulations, and around the nature of assurance that the internal auditors provide or intend to provide to their clients or the management if they are working as part of the corporate itself. Then, as I said, I'll be picking out a few important words and then elaborating those words in terms of the practical life scenario or practical business application. Let's say some of the words that I picked out from the previous definitions or preface or these framework to internal audit are internal controls and risk management are integral part of management function and business operations. So this is one line I'm picking out for a practical example. Then it talks about enhancing governance. Then it talks about achieving organizational objective. It talks about organizational objectives incorporate the interest of all stakeholders. Then it talks about effectiveness of internal controls and risk management. And then to top it all, business objectives, which are very specific to a particular business, and how those are met, again, depends on what the strategy is, how they are operating, what sort of systems they have, what sort of policies they have, what sort of processes they have. So again, looking at these few important words in terms of how those are applied or how those are looked at in a practical life scenario, and taking few examples. First, before we move on to examples, I'm looking at the definition of risk, because it's multiple times we've spoken about risk management. So it is important to also understand what does risk mean, because different people have different perceptions of risk. And it is important to look at one definition if we have to contextualize that definition in terms of the business. Let's say our own institute defines risk as an event which can prevent, hinder, fail to further or otherwise obstruct the enterprise from achieving its objectives. A business risk is the threat that an event or an action will adversely affect an enterprise's ability to maximize stakeholder value and to achieve its business objectives. So there is a separate SIA on this, which is on enterprise risk management, that is SIA 13. And I'll try and pick out few items from that SIA as well and link it back to the SIA 230, which is standards on internal audit. Then ISO also defines risk as effect of uncertainty on objectives, which focuses on the effect of incomplete knowledge of events or circumstances on an organization's decision-making. Now, few important words that come out of these definitions are, achieving the objectives, risk being seen as threats, then uncertainty on the objectives, linking it back to decision-making. And then CFA also says that risk arises out of uncertainty. It can be defined as the effect of uncertain future events on the company or on the outcomes of the company achieves. One of these outcomes is company profitability, which is why it affects the risk on profit, and rates of return are often assessed. So Mr. Nanda spoke about risk and returns. If there are no returns, then there is no risk. If there is a risk, there is a return. So risk and reward theory. So he spoke about that. That definition clearly links back to what he said in his keynote address. Then Society of Actuaries also defines risk as possibility of failing to meet the objectives, and it can only be defined in a context. So if I talk about internal audit or if I talk about risk management, the common context is the business. Without putting things into the context of a business, the internal audit will not make much sense. Risk management will not make much sense. Those will be mere tick in the box compliance activities. If you have to really drive a value out of internal audit or out of a risk management exercise, you have to put it in the context of business. And in any business, everything is very specific, laid down to the objectives, to the vision and mission of the business, why that business exists, what is it trying to achieve, what is it doing on a daily basis. There are clear objectives in any business. So we'll look through some of those objectives in a practical sense, how we evaluate those objectives, how we link back risk to those objectives, how we evaluate the objectives when we are doing internal audits. So I'll take some practical examples. Before that, I'll move into one of the words that I picked up, which was around independence of the auditor and audit being part of the management function and supporting the management. So here what you see is on top is the board of directors. Then there is an audit committee. Then on the right, there is an executive committee. Then on the center is chief audit executive. The reason I put it in the center is how the chief of audit or the internal audit team is interacting with various stakeholders within the organization. You'll see the internal audit function has multiple touch points. The chief of audit, he reports into the audit committee. The audit committee reports into the board. The board reports into the, let's say, shareholders. So there is a clear governance around how the internal audit function operates. And, if you look at the process owners or the head of the departments, they also interact with the internal audit function or with the chief of audit. And how the in-house function operates is it also works back with various functions. And if there is an independent internal auditor or a firm of outside consultants, they also work back with the chief of audit, which in turn, reports into the audit committee. And sometimes the independent firm also, is regularly giving their presentation or updates to the audit committee and to the board in some cases. So looking at the overall structure where the internal audit is functioned, where it is positioned. So clearly three things are, coming out of this, that internal audit is seen as a trusted advisor. Internal audit as a function can generate insights around the business, whether some of the objectives in the business are being met or not met. It is an independent assurance provider when it provides assurance on the risk and controls, whether the risk management systems are working, whether the internal controls are operating effectively or not, whether the design of internal controls is adequate or not. So clearly there is a linkage with all these stakeholders within the organization, and there is a linkage to the objectives, and there is a clear hierarchy through which the internal audit functions. So this is just an illustration around how internal audit can be positioned, whether somebody keeps it as an independent firm, which is outside the organization, or he keeps it as an in-house function. So internal auditor will keep on interacting with the audit committee and the board and the executive management and the process owners and the HODs. So it has multiple interactions, and all those interactions are around risk and controls. And fundamental thing is internal audit is all about internal controls. And it's been spoken earlier as well. So there are three value drivers to it. One is risk management we are looking at. Second is efficiency. Third is effectiveness in the operations. So all these three value drivers for internal audit are linking back to the fundamental definition of internal audit. And that is where we started with what is the definition of internal audit, how is it defined, and looking at how the function itself is placed within the organization. Now I'll take one more example, which is a very basic concept, and it's a concept of life cycle. Whether you are doing a process review, whether you are doing a risk management exercise, whether you are doing a strategy evaluation, or you are doing a evaluation of the operations, the concept of life cycle will come in. Let's say if you are looking at products in a company, every product will have its own life cycle. A company is manufacturing, let's say, some something which is a consumer product. So it will have a life cycle. The product will be there, it will be marketed, it will have some shelf life, then it will be sold. Then there will be some new products which will come into the market. So the product will go with its own life cycle, right from starting to the phase out, there will be a life cycle. So first example you see on the concept of life cycle is, let's say, the human life cycle. We are all born, we are all infants at a certain stage. We are young, then we go to school, college, then we grow young, we go and join a corporate, then so and so forth. And then there is an old age, then there is a, let's say, natural end to that life cycle. And one of the objectives to that life cycle could be completing the life cycle and achieving your personal objectives within that life cycle. Now, what could be a risk to that life cycle or something that could disrupt that life cycle? We all have seen last 2 years, COVID, there has been a virus. Let's say within this picture, a young man catches a virus and suddenly the life cycle is disrupted. That's the end of story. We've seen so many cases. That happens in a business as well. If there is a significant risk that disrupts the value chain of the business, then the business can be in for huge amount of losses. So whenever we are looking at a business, we are looking at a life cycle in the business. And that is where the second example is. Every business starts with an idea. There is a vision around that idea. Then there is a mission or a goal that what the company wants to do. And then there is a strategy to achieve that mission or goal. And that strategy is translated into business processes. And those processes are, managed by people, systems, and then there is a natural progression around implementation of that strategy. The moment that strategy gets implemented in the short term or in the midterm, on the long term, you see growth in the business. Then there is expansion in the business. Then at a certain stage, the business becomes mature. Then there is stagnation in the business. And then the business starts to decline. If you look at the definition of internal audit or let's say the principles, it talks about, risk will, be different in terms of different stages of business. Let's say a new startup business, which has not even yet clarified its vision or mission statements, will have very different risks, because their biggest risk will be a failed strategy. If they are not able to implement their strategy, that will be their biggest risk. Vis-a-vis, you see a business where the strategy implementation and growth is happening, but they are not able to expand their business because either the capital availability is not there or capital expansion is not there, or there are some external market factors which are not allowing for that expansion, or they are having some internal challenges which are not allowing that expansion. So looking at these things, you'll be able to make out that every business at a different stage will have different risks for it. And that is where if you even look at the concepts of valuation, you differently value high growth companies, you differently value mature companies, you differently value companies which are nearing stagnation, you differently value companies which are in the process of a decline. Similarly, in risk management, you differently evaluate companies which are at different stages in their life cycle. So these are just few concepts which I wanted to bring out, because whenever you are doing a risk management or an internal audit exercise, these will be important. Let me give you one more example around why these will be important in doing internal audits. Let's say you are doing an internal audit of a startup company. Now, the startup company typically has a problem on the fourth stage where they have defined a strategy, but they are struggling with defining proper processes. They don't have policies in place. They don't have SOPs in place. They don't have proper systems in place. That is where the strategy implementation really goes out for a toss. They're not able to implement their strategy because they're not able to find talent. They are not able to retain talent. That is where they have to shell out ESOPs. They're not able to, build processes. They are not able to have stable systems. They don't have, well laid out SOPs. Roles and responsibilities are not clearly defined. You will see those sort of challenges within a startup. And that is where when you start engaging with your clients or within your company in the startup, you start talking on those points that the internal audit can help evaluate those processes, figure out what are the gaps in those processes, what are the design gaps in the process, what are the operating inefficiencies in that process, then give some practical recommendations to make those policy, process, system level improvements. And if there are problems with, let's say, productivity or people, then internal auditors can evaluate that as well. Now, let's say you are taking a mature company, but in a different industry. Now, let's say different industries have different sorts of profitability. There is one company which is in a cola industry, or let's say software beverage industry, let's say Coca-Cola. Coca-Cola has a very highly profitable business because the product cost is less. They've done the brand building. They have a brand. They sell out on the brand, and then they make those profits because their, let's say, pricing is very, I would say, remunerative in terms of when you compare it to the costing. Their biggest risk probably today would be in terms of, let's say, either on supply chain, or let's say on product quality, especially when they have franchisee owned bottling locations or franchisee owned bottling operations, where they've given some part of the operations to a franchisee owner and they are giving concentrate. And if there is some dilution or some mishap that happens in the concentrate, then the brand value goes for a serious amount of loss. So that is where different companies in different industries will also have different risks. Let's say if you pick up an airline company, airline traditionally all over the world is a company, is an industry where profitability is a consistent challenge. And that is where if you were to do internal audit in an airline, you'll be focusing very highly on the costs, because the moment the costs are not managed, they will be in for a loss, because the business model is such that profitability is a consistent challenge. So different companies in the different stages of a life cycle, in different industries, in different segments, in different sectors, have different challenges. And that is where internal auditors come in for evaluation of the process. They look at the life cycle, where the business is, whether it is a mature business or a growing business or a startup business, what sort of challenges would be there, whether there be design issues, system issues, people issues. So all those sort of things go into consideration while thinking of objectives of an internal audit. What I will do as a next step is link all these practical examples to what is written in the SIA. And that is where you'll be able to appreciate the SIA more, saying that the standard gives us the guidance, and that guidance is practically very relevant in today's world. And that is where SIAs are very important if you have to do internal audits. Now, the next example I'm taking again from the few words I picked up again from the objectives. Like Nanda sir said that evaluating strategy with the goals, continuous risk assessment, goals in the business, risk appetite, financial, vendors, consumers. So all those risks in any business, irrespective of the sector, irrespective of, the stage in the life cycle, irrespective of, let's say, the product they are selling, will have 4 types of objectives. What are those 4 types of organizational or business objectives? One is strategic. Second is financial. Third is operational. Fourth is compliance. And to answer Mr. Khandelwal's point as well, whether you can comment on the operating effectiveness of the company, if you look at the operational goals, if those goals are not met, the operations are not managed properly. You can anyways define your internal audit scope in a way that it specifically targets the operational objectives in the business. Now, a lot of companies, they want to do only compliance focused audits. That is where you define your objectives, which are very focused on compliance. Now, there are some companies which are in a mature stage of risk management, and a lot of Indian companies are moving in that path. They want to focus their maximum efforts of internal audit in terms of evaluating the strategic and the financial objectives. So if they say that strategy and finance are in place, we already have standard SOPs, standard systems, procedures to take care of our operational risk. And compliance, we are managing in a different way. So I think from that perspective, every organization will have choice of objectives which they want to put in for their internal audit. Let's say we look at some examples of what the strategic objectives could be. Objectives around vision and mission, objectives around strategy, new initiatives, customers, product portfolio, markets, growth, competition, expansion, mergers and acquisition, culture, branding, business model, innovation. So these are some of the examples. You can have a lot more examples within the strategic objectives. That will depend on what the business wants, to do, and what the strategy for the next 3 to 5 years is. Looking at financial objectives, capital availability, funding for expansion, business planning, budgeting, effective utilization of funds, liquidity and credit, cost and expense management, hedging, insurance, financial reporting, disclosures. So these are some of the financial objectives which every company will be, even if those are not specifically written or laid out, they will be pursuing these objectives. And the operational objective, let's say business continuity, product delivery or service delivery, supply chain and distribution, customer satisfaction, let's say customer delight, customer protection, employee engagement, fraud risk management, IT, cyber. So all these areas will have specific objectives defined in those areas. Let's say look at compliance. You have objectives around governance. You have objectives around statutory, regulatory, contractual compliance, ethics, integrity, fraud prevention, data protection, privacy, environment, health, safety. So these are just, 4 broad sections where you can define your internal audit objectives aligned to these business objectives. Every organization will have objectives, they will have strategy, they will have goals, they will have targets, and those will be aligned to these objectives, which are, let's say industry agnostic, or which are, generic in nature, that every business will be working on these fundamentals. If you pick out on these fundamentals, you can pick out what you want to do. Let's say you want to audit the supply chain. You can pick out supply chain and distribution as one operational area. You want to pick up business continuity. You want to pick up, business continuity planning and disaster recovery. You can pick out those areas, provided those are a priority for that business. Those are, the defined objectives, or even if those are not defined, the business wants to evaluate those objectives to see if they are doing well on those parameters, or if there is an improvement opportunity within those parameters for them. Again, the fundamental is that if you are thinking of risk, it has always to be in line with the objectives, and the context has always to be the business. Outside the business context, you will not find relevance of internal audit. Outside the context of business, you will not find relevance for risk management. Everything to do with risk management and internal audit, it has to be very objective, and it has to be very contextual to the business you are looking at. Then looking at enhancing governance, because that was a word which came out from that previous definition as well, definition of internal audit. It says to enhance governance. We've looked at one level, how it flows down from a board to an audit committee to a chief of audit. Now we've looked at organization-wide objectives. Now, if you were to further split these objectives into different verticals, or let's say different CXOs, let's say chief executive officer in a company, he's always focused on board and investor relations. He's always focused on culture and strategy, sales and marketing, global market development, or let's say local market development, new business, revenue, growth. So I think these are some of the objectives that every CEO works back with. If you look at the job description of the CEO, you will find these always there in every CEO's job description. Look at the chief financial officer. He will be focused on financial management, fundraising, margin improvement, cost management, balance sheet and P&L management. Now, if you were to talk to a CFO and go for an internal meeting, let's say his primary task or priority for, let's say, the next 50 days or let's say 30 days is balance sheet and P&L. Now, for the next year planning, whether the balance sheet is leveraged or not, what sort of debt equity he has, what sort of debt equity he's looking at, whether he's looking to raise more debt or he's looking to raise more equity, just to keep the balance sheet structure intact, the CFO will have very clear objectives. So the organization has the objectives, then the CXOs, they have their roll down objectives, and those roll down objectives are always linking back to what they want to do as a team and what they want to do as a business. And where the internal auditor comes in, whenever we are engaging with, let's say, a CEO or a CFO or a chief operating officer, we'll be talking to them on specific objectives. Let's say chief operating officer, he's managing, let's say, a multinational company. So he has multi-site operations. One of his objectives is seamless service delivery. One of his objectives is customer satisfaction. One of his objectives is business turnaround. Anything that goes down has to be back up with, let's say, 99% uptime or any other SLAs you might think of. Then continuous process improvements is another objective that the CEO works back with. If you talk to the chief legal officer, they'll be talking about laws, regulations, compliance, contractual compliance, agreements, litigation, notices. So every key stakeholder will have certain objectives which they are working on a day-to-day basis. And why I am taking these stakeholders as one is because you read through the SIAs or you read through the guidance which our institute provides, you'll find multiple times the words are used, and those words are those charged with governance. So if you look at the board, you look at the audit committee, what is next in the governance line? These people are the next in governance line because they are reporting to, let's say, the CEO is reporting to the board, the CFO is reporting to the CEO, the chief operating officer is probably reporting to the board or the CEO. The chief legal officer maybe is directly reporting to the CEO and to the audit committee, and on some matters to the board as well. So there are certain people who are charged with governance responsibility. They have their own objectives. If you link back your internal audit objectives to these objectives, which they are managing on a day-to-day basis, you'll find more relevance in the internal audit. You'll find more better engagement with those stakeholders. And you'll always find that those are linking back to the broader organization level objectives, which are common for every business at a fundamental level. But yes, those are not, a comprehensive list. That's a very brief and illustrative list. We can always build down on those list items, given the specific nature of the business, given what you're looking at as a business. So another takeaway point here is that if you're looking at these job roles at different levels, these four leaders, or these four people, or let's say the CXOs, despite the fact that they are, guided by their personal knowledge of each risk, let's say the knowledge of the chief executive officer around strategy or risk relating to strategy will be very mature when you compare it to the chief legal officer or chief of HR. So different people will have different perceptions of risk. And that is where internal auditors also act as a balancing point when they are engaging with these stakeholders on risk management, on risk assessments. They bring in their independent assessment on those risks, that why these risk items are important, because all these items are in a way linking back to the organization objectives. And that is where the role of internal auditors is within the risk assessment or risk evaluation process, to bring that independent judgment on risk items, to put those into the context of business and business objectives. So these are just two examples I wanted to take before I move on to the SIA. Then the third example I wanted to take, again, going back to what Nanda sir said, evaluating strategy with the goals. So we've discussed strategy, strategic objectives, we've discussed financial objectives. What you see here is a simple business model canvas. Again, this is not specific to an industry. It is an industry agnostic model. And this is something that, let's say, the MBAs and chartered accountants do day in, day out. Whenever you are evaluating a business model is built on these 7 broad parameters. What are the key partners that the business is working on? Let's say some of the activities are outsourced, some of the resources are acquired outside the enterprise. So Nanda sir mentioned about workforce. He mentioned about vendors. So all those key partners will come into this section. And what are those activities relating to those key partners? They will have specific decision-making points. They will have specific risk items linking to those partners. Then looking at what are the key activities that the business performs on a day-to-day basis. To, those are operational in nature. So you will have operational risk. So we have seen operational objectives. So those key activities will have some operational risk attached. Then what are the key resources? That those are typically the assets acquired to offer and deliver the described elements. Let's say you see a manufacturing companies, typically they acquire plant and machinery. Those are the resources for them to deliver their product to their consumers. So those key resources, you will have risk items attached to those key resources as well. And typically, let's say fixed asset. If it's an IT company, those IT assets will have IT related risk attached to those resources. Then the value proposition that the business offers. The value proposition is typically, something which the business is trying to solve for the customer. What are the customer related problems that the business is trying to solve? Let's say tomorrow you are auditing Swiggy, Zomato. They are trying to solve a food delivery problem that, a food item reaches to you within 10, 20 minutes. That is a customer problem they have picked up to solve. What impacts their value proposition directly will be the risk item for that particular business. Let's say you look at any other business, let's say Zoom meetings. They are trying to solve a customer problem that you don't have to physically go out and meet people. You can meet people over a Zoom meeting, interact with them. And that is one problem of transportation they are solving by giving you an alternative platform to interact with people and connect with people. What are the risks for Zoom? Those will be essentially all technology related risks, which can bring their website down in a matter of seconds. Those will be the most significant risk for Zoom as a company. Now look at customer relationships. So customer relationships are established within each customer segment. Let's say there is a company which is into, let's say Titan as a company. They are into selling gold ornaments. So they have customer relationships which are maintained within a customer segment. So that company, Tata as a company, has different brands. Within those brands, they have different customer segments. Now, how those customer segments, are being served will become some concern area for Tata as a group. That is where at a group level, they will have specific risk items sitting within each customer segment. Then they have distribution channels. So value propositions are delivered to the customer through communication distribution channels. We took the example of Coca-Cola. Coca-Cola probably supply chain distribution is their biggest risk as on date. Let's say there is a war in Russia, there is a war in Ukraine, there is some supply chain disruption in Pakistan, something in Sri Lanka. Sales across all these regions will be disrupted for that software company. Then you look at, how those customer segments are interacting. So again, in a nutshell, these are certain elements which are very specific to every business model. And based on these elements, every company will have a cost structure, every company will have revenue streams. So if you are able to understand these items within each business, you will be able to come up with all the risk in that business, because essentially all risk will link back to decision making in the business, will link back to the business model. All risk, irrespective of whether those are strategic, those are financial, operational, compliance. So this is just a practical example. Whenever you do, let's say, a risk assessment exercise to assess risk, what are the most significant risks to the business model? If you go back to the Companies Act, it will say, the definition says the audit committee has to look at, the risks which matter the most. Now, it is nowhere defined in the Companies Act what are the risks which matter the most. So it is a fundamental rule that anything that impacts the business model or the sustainability of the business are the risks which matter the most. So it is an unsaid rule, but it is nowhere written in the law. But something which is very, very much understood by the chartered accountant is the business model, is something which is understood by MBAs, it's a business model, something which is understood by the people who are charged with governance, or let's say people who are managing the business. It's the same business model. This is just a canvas to put it out in terms of any business you are evaluating. Then comes in SIA 230. Now what I'll do is link these practical examples to what the SIA talks about and how these link back to the SIA. So SIA 230 talks about the objectives of internal audit vary widely dependent on size, structure, complexity of the entity subject to internal audit. Now we've seen the concept of business life cycle. We've seen the concept of how a business goes through different stages of maturity, whether it's a startup, whether it is a mature company or a high growth company. So again, this definition talks about that aspect only. It says the objectives of internal audit vary widely. So if you're a startup, you will have different objectives. If you're a high growth company, you have different objectives. If you're a mature company or a stagnating company, you have different objectives. That is what the SIA says. It depends on size, structure, complexity of the entity subject to internal audit. These objectives are also influenced by laws and regulations and specific requirements of the management. So let's say if you are talking about what are the requirements of the management would want to evaluate their strategic objectives. They would want to evaluate their financial objectives. They would want to evaluate their compliance objectives, and they would want to evaluate their operational objectives. And, in most cases, defined by those charged with governance. We've seen that organization structure, who are the people, those are charged with governance, where they sit in the organization at different levels. So this SIA only talks about introduction section, only talks about these practical aspects in the business. And that is what the Companies Act, Section 138 also talks about. The audit committee of the company or the board shall, in consultation with the internal auditor, formulate the scope, functioning, periodicity, and methodology of conducting the internal audit. Now, how you define a scope? You look at the objectives in the business, then you define the objectives of the internal audit, then you formulate a scope. How you define periodicity? You speak to the management. How you define the methodology? There is guidance available from the ICI. You're doing internal audits based on that guidance. So everything within this SIA links back to what we are doing practically in a business, or what you see day in, day out in a business. And then the SIA 230 introduction section also talks about, in case of other organizations which are not covered by Rule 13 or 138, those who appoint the internal auditor, example, the owners, the promoters, the board of trustees, etc., would generally define the objectives of internal audit along with the internal auditor. So let's say the internal auditor is clear about what are the objectives of the organization. Then the auditor proposes some scope that gets discussed with the management, and the management agrees that these are the scope items where we want to do the audit. So that is how typically you come up with a draft scoping, or let's say coverage of internal audit. Then the SIA also talks about, while the specific objectives of any internal audit may vary from company to company, these objectives are generally consistent with the overall definition of internal audit. We've looked at the definition of internal audit. We've broken down that definition into different words, what those words means, what those words stand for, where those words fit into a real life environment. We have seen those examples. We've seen the example of business model canvas. We've seen the example of life cycle as a concept. We've seen the example of strategic, financial, operational compliance objectives. We've seen the example of organization structure. And that is where the framework also comes in. And that is where the SIA talks about. Then the SIA says internal audit provides independent assurance on the effectiveness of internal controls and risk management processes to enhance governance. Now, how do you enhance governance? You work through those objectives, identify what are the objectives which are focus areas for people who are charged with governance, what are the areas where they want to enhance governance, and achievement of organizational objectives. You've seen a list of organizational objectives. You evaluate whether those are being achieved or not achieved. You can easily give a effectiveness score to a board, saying that on these objectives, these parameters, your organization is 2 on 10, 3 on 10, 4 on 10. Your objectives are not being met. You probably will end up in a scenario where a strategy will not get implemented, where you'll not get the desired returns on your business, where your return on equity, return on assets, return on any investments can go out of your expectations. So that is where those objectives come into play. Then introduction section also talks about the current law in India permits internal audit to be performed either by the external auditor or by the employee of the company, or let's say somebody who's part of the external agency. Typically, it works out in a co-sourced or an outsourced or some sort of a in-source model where in-house people are auditing. But the fact of the standard is the standard applies to all ICAI members in all situations, irrespective of whether those members are working as an in-house internal audit function, or they are working in their capacity as an employee, or they represent an external audit firm, or let's say an outside external internal auditor. Let's say internal auditor who's not on the payrolls of the company. So again, this is more on the applicability that it applies to all ICAI members. Then some of the objectives of internal audit as per SIA 230 are to document the formation and functioning of the internal audit activity and the terms of the outsource arrangement or in-source arrangement of the internal audit function, then providing clarity to the internal auditor and its stakeholders regarding the nature of internal audit and its working, ensuring linkage between what is expected of the internal audit and how those expectations can be met within the framework governing the internal audit, and then promote better understanding on key operational areas such as accountability, authority, responsibility, and such other functional matters. Now, where all these objectives are defined, typically these are defined either in an internal audit charter, or let's say if you are working as an external auditor, you define these parameters or objectives in an engagement letter. Typically, every internal audit function should have an internal audit charter, and that is where the SIA also provides a brief format of what the charter should look like, what it should address, what it should talk about. So those things are provided in the SIA. We'll look at some of the table of contents of the internal audit charter as well. And then some of the key requirements of SIA 230. So it says every internal auditor shall be guided by a document that defines the objectives of internal audit. Now that we've understood the objectives in a business, we have understood the definition of internal audit that defines the objectives of internal audit itself. It's an independent assurance, looking to enhance governance and to ensure that the organizational objectives are met. We've looked at the organizational objectives. We looked at how the definition links back to a practical world scenario. Then, the standard says it is the duty of chief of internal audit to have in place a written internal audit charter documenting the formation and functioning of the internal audit activity, how you evaluate the objectives in the business, how you do your risk assessment, how you create a risk-based audit plan. All those things, go out into doing the internal audit activity. All governance around it is laid out in the internal audit charter. And then the SIA also says where part of the internal audit activity is outsourced, the chief of internal audit shall have a formal engagement letter defining the terms of engagement, documenting the nature of the arrangement with the external audit service provider. If the internal audit is completely outsourced, the engagement partner will be acting in the capacity of the chief of internal audit, who shall ensure a formal engagement letter documenting the terms of the engagement. Then the chief of internal audit shall ensure that the internal audit charter is reviewed and approved by those charged with governance. Again, you see these words, those charged with governance. You will see these words multiple times in multiple standards. And for internal audit, this is very important. It defines as board of directors, the audit committee of the board. And if you're looking who is going to sign that engagement letter within the, let's say entity has to be signed as per the delegation of authority. Whosoever is authorized to sign that engagement letter should be signing that for the external service provider. So again, some of the words we have picked up, some of the words which you'll keep seeing in different SIAs will, now I believe that those will be simplified in terms of examples. If you want to take more examples, I can take more examples. Then the SIA 230 also talks about some of the requirements in terms of, it is important that the governing body members and other stakeholders are aware of or in agreement with the objectives of internal audit and other relevant portions of internal audit charter and engagement letter. This information shall be communicated to all stakeholders through formal channels of communication. Now, if you have an internal audit charter, you will typically lay down what are the objectives of internal audit. And those objectives are linking back to risk management, efficiency, effectiveness in the business. And those are linking back to the objectives of the business itself. So in a way, it's more like a three-way match. You have objectives in the business, you have value drivers for internal audit. Based on those value drivers, you define the objectives for internal audit. And that is where you come up with an engagement letter or you come up with an internal audit charter. That is how it is typically done in a practical world. Then the internal audit charter and the engagement letter shall be reviewed periodically by the chief of internal audit and the engagement partner to ensure its relevance to the changing times or circumstances. Example, a change in scope. Or it could be, change in a business scenario or change in a business model. Let's say you are working for a startup and the business model has changed. Now, what do you do? Whether you will keep reviewing those areas which are no longer relevant, or you will change the engagement letter or change the internal audit scope as per the existing business model. So I believe that you'll be changing the business as per the existing business model. So again, these are some of the requirements of SIA which are applicable to all members of ICI, and they have to comply with these requirements. And there is explanatory comments which are provided in the SIA. And it says that indicative list of areas covered in the internal audit charter is as follows. It talks about the mission, vision, internal audit function, purpose of the objectives of the internal audit function, then reporting structure, independence, scope, approach, accountability, authority, roles, responsibility, quality assurance, and conformance with the SIA. So these are some of the indicative list of areas which are provided in the SIA itself. If you were to define an internal audit charter for your organization, you should be having these parameters in mind. Then there is a table of contents. If practically you are going to make some sort of a policy and a process document around it, you will generally have a document history. You will have statement of responsibility. You will have something on internal audit planning, execution, reporting, follow-up, performance assessment, how the internal auditor works with the external auditor, audit resourcing and appointment, then document change management, and who will be the key contact if you were to make any change to the document. And then building on the guidance, again, it also talks about SIA 610. The activities of internal audit may include one or more of the following: monitoring of internal controls, examining of financial and operational information, reviewing of, operating activities, review of compliance to laws and regulations, risk management, governance. We've touched upon all these aspects, how internal auditors can evaluate these whenever they are looking at a business model or objectives in a business, or, they are looking at a life cycle, the concept of life cycle within a business, whether they want to review a product life cycle, whether they want to review a customer life cycle, or an order to cash cycle, or a procure to pay cycle. So there are different cycles in the business which talk about operations within that particular domain or function within the business. That is where you use the concept of life cycle from start to finish. Let's say you are reviewing HR. You always talk about hire to fire. Somebody is coming in through the organization through a hiring process. Then in the end, there is an exit process or full and final settlement process. So again, it's a complete life cycle concept which goes into almost all business cycles, whether you are reviewing HR, hire to fire, or procure to pay, or order to cash. Any questions you have, more than happy to answer the questions. So this is the brief presentation I had. I hope I was able to give you some practical examples in terms of, how these concepts are used or how the SIA is applied whenever we are working in an internal audit function, be it in-house, be it outside consulting, or even as an advisor or in an advisory role to any organization.
Thank you so much, sir, for sharing such an amazing knowledge. We have one question from Mr. Rajiv Kumar, that there are different other units in the organization like compliance or security like investigation along with the existing business and finance teams. Does this make role of internal audit limited?
Not in a sense, I would say. Again, it depends on what objectives you are looking at. If your internal audit charter says that you're looking at only, let's say, operational objectives, or let's say you're looking at strategic objectives, I would say if that in that case, internal auditor is looking at strategic objectives and somebody else is looking at security and compliance objectives, then internal auditor sits at one level above those people. It all depends on what objectives you are looking at, how many people you have, what is the skill level of the internal audit team. Again, it's more like an open question. It can't have a, I would say, universal answer to it. Depends on the situation.
Thank you so much, sir, for your valuable time.
Thank you so much.
Now moving ahead with our next technical session, I would like to introduce our next technical speaker and a worthy speaker, CA ANL Madhavanji. He is an active member now on many forums after completing both the professions of Chartered Accountancy and Chartered Secretary in 1986. He completed postgraduate diploma in business administration and Bachelor of General Law. He is presently engaged in active project assignments, mentoring the career students and delivering topics of professional interest, and had been a contributing editor for more than 3.5 years in the largest circulated healthcare fortnightly magazine, Express Healthcare Management. Now I request CA ANL Madhavanji to take over for the technical session on internal audit, don'ts versus do's. So mic is handed over to you. You are on mute mode.
Thank you very much, Reena. Just give me a second to share my PPT. I thank the chairman, Nandaji, to have given an excellent keynote address on the don'ts and the do's. I need some help to, how do I?
Sir, you have an option to share screen.
Okay. In the share screen, all participants, okay. 1 minute. Yeah. All participants, right? Yeah. Host only. Okay. No, I have 1 minute. Okay. Share. Is that okay? Okay, now let me put down this. Great. Now the subject caption is Global Trends in Internal Audit, a look ahead, under which I'm going to address on internal audit. I've specifically taken don'ts first than the do's, primarily because even when we define a person as a good person, we always tell all the negatives and then say if somebody doesn't possess this negative, then he is a good person. So I've gone in the same way in order to expand that. Let me travel with my presentation. Internal audit. These two concepts of building trust and enabling sustainability applies to internal audit as well. I have a small disclaimer. Unlike the previous participants and speakers, I am going to talk about general practical points for internal audits only. It's something like a desi kind of thing. And another thing is no jargons, no technical references cited anywhere. I'm not going to talk about anything of that nature. Considering this, let me proceed further. Internal audit, we define local versus global. Is there anything global different from local? Yes, we are going to address that a little later in my presentation. Now take this internal audit as a scheme in a sort of 7-dial system. First is the scope and transactions audit, which talks about even identification of risk assessment, as has been already pointed out by the previous speakers. the risk assessment is very important. Whenever we take up any internal audit, we do a pre-study of peers reports and inputs from clients. This is very important. Building up any audit without understanding the background of the industry or the client or the nature of the constitution of the organization, etc., will be difficult for us to proceed further properly. Then we also have to have a kind of understanding as to what kind of systems they are following in their accounting, Tally, Zoho, ERP, SAP, etc. Now, definitely internal audit will have measures of internal controls, including on not only on transactions, but also on fixed assets, inventories, and more particularly on human resources management. Many a time this HR aspect is left out during practical studies of internal audit, which we will address a little later also. Then the verifications on statutory compliances and tax laws. This is very important. Even though most of the people are all very alert on this particular thing, sometimes what happens is they miss out on the latest updates. So that is something to be looked into. Reviews on processes and global collections wherever there are. There may be holding company in India, subsidiary companies overseas, and there may be step subsidiaries, or even there could be branches overseas. All these things have to be addressed properly at the time of audit. Then finally, the report on assurances, which is the function of internal audit, presentation, and billing. I feel that if we take care of all these 7 aspects, then a proper internal audit would have been conducted. Internal audit, what are all the don'ts? I straight away plunge into don'ts. First, the first don't is don't assume, check. Every transaction will have a history and a geography. The history will be pertaining to the past records or past transactions, and the geography may be pertaining to the geographical locations. Hence, this requires to be checked properly. Do not restrict your audit to particular things. Please expand. Don't restrict, expand. Scope given is only indicative and cannot be exhaustive, because nobody defines the scope as exhaustive as possible. Don't go by routines, innovate. It may be difficult for every time to apply mind to innovate. Nevertheless, that kind of a focus should always be there at the time of doing audit. Routines are like copying peer or previous audit report. That could be avoided. Don't always look for mistakes. Whenever we go for audit, we think that we are there only to find out the mistakes. Sometimes the compliances are properly done. That can also be recorded. Next. Don't postpone, write daily diary report. Many times what happens is we are not understanding or really taking care that we are investing our potential time with professional intelligence on the subject of audit whenever we are given the task of audit. We should not and cannot postpone recording whatever that are being talked about or addressed. On a daily basis, it is required to be recorded. Don't pretend knowledge, acquire. Sometimes what happens is in the accounting profession, sometimes we pretend knowledge. Accounting profession does not accept pretenders. Please update with knowledge. It has got to be acquired. Don't waste time on unnecessary matters. Look at material issues only during audits. Sampling is definitely okay. There are organizations of audit firms which use software also for sampling. Next. Don't accept client's version as it is. Double check. Clients have the habit of convincing, which needs thorough checking. Listen to them carefully, but decide after the audit. That's very important, because at the time of audit, there is every possibility of convincing replies which may not be right from the perspective of audit. Don't hesitate to question if required. Whenever there is a genuine question that arises on certain important areas, that has got to be addressed. But the address of those questions should be both firm and polite. Many a time, the people who are firm may not be polite, or the other vice versa, but it has got to be practiced. Don't feel shy to meet the topmost person of the client with points. Here again, when we are doing the audit, many a time there may be some senior persons who will be barging in to understand what is the status of audit completion, primarily because they may have certain requirements to present it before the next 2 days or 3 days. Nevertheless, it is better to update them on the spot with whatever is the status rather than waiting for the report to be given later. Next. Don't prolong audits without closure. Sometimes the audits gets abruptly stopped and subsequently taken up, and like that it continues without closure. That is definitely not going to be comfortable, as the timelines ought to be defined properly and it has got to be closed in order to get the best outputs and results. Don't fail to review and steer the team, particularly when there is a supervisor or a manager or a proprietor or even the partner. There has got to be a kind of steering of the team, because the team will comprise of mixed personalities, seniors, juniors, with different turnaround and output skills. So they got to be definitely steered properly. Don't delegate all functions. As we all know, the delegation of functions happens only on responsibilities and not on authorities many a time. However, adequate empowerment has to be given in order to continue with a progressive internal audit system. Don't focus too much on trivial matters. Here again, we have talked about the trivial matters. We become emotional and sometimes we spend a lot of time just because we understand them that better. No, that has got to be avoided as much as possible. Don't fail to train second in command. Many a time, one's absence should not be felt, and a good trainer come learner should allow space for others always. So a second in command, either the individual or the team, is also important. Don't delay reports and billing. Yes, the timely reporting for audits is a must. The billings and collection post the audit is also a must. When we start the audit, we should start in time. Even during times of work from home, during the pandemic period, the start time, end time have to be very important in order to convince ourselves as well as to finish the task in time. Now, let us go towards the do's. Do be comprehensive in audit plans well in advance. Many a time, drafting an audit plan in a structured manner for individual client is also posing some difficulty. So a proper audit plan with past experience would be the best to take care. The start time and end time should be meticulously followed. Do train the relevant team. Your training, educating the relevant team for the specific audit is a definite prerequisite for a successful completion. The team should have an access towards the details regarding the client, their business, their past track record, any past reports, etc. Some training and orientation is definitely needed so that they understand upfront, even before starting the audit. Do measure progress in periodic intervals. Every successful completion and closure of audit would require periodic measuring of progress. Delays by clients should also be pointed out without hesitation. The readiness of the clients is very important in order that the completion of audit can take place. The pretension by the client that they are ready, but actually on the spot, they may not be ready. Those things should be pointed out. And if it is very serious, then one has to even withdraw from the audit temporarily until the client is ready. Next is do spend extra time where required in specific audits. You may carefully look at this option as some audits required to plan extra time investment. Yes, the definition of the scope might expand itself. Hence, we need to extend this extra mile wherever required. Do branch off your vistas when required. Your open-mindedness to open up new avenues during conduct of such audits or look at connected branches of the domain would be a welcome step. Instead of restricting oneself to the focused scope and on a particular thing, it is better to look at the other aspects if at all it is warranted. Do direct a team when required discreetly. Clients may require a steering team all the time from auditors, and hence this also should be carefully nurtured and monitored in order to steer the team. Do look at milestones of progress. Progress milestones are prerequisites for measuring turnarounds on audits and on deployed resources, efficiency, and effectiveness. As we have already said about the complexities of handling the junior and senior staff, there is always a requirement of measuring the progress of audit. Sometimes there may be client's perspective, sometimes maybe from the resources perspective. Both have to be looked into. Do look at varied audits. Whenever there is a scope for looking at a multifaceted audit environment, one has to look into that in order to both development as well as to bring in the right skills in the resources. Do learn all required technicalities, be it accounting standards or Ind AS or company law or IT law or GST law under or any other rules, statutes, any relevant updates, notifications or compliances under or filing dates, etc. has to be very much updated. It is always the best to be alert on updations and systems to facilitate better turnaround times on the internal audits. Do learn systems, MS Word, MS Excel, 365, PPT, Tally, Zoho. It all helps in order to have a proper specific program orientation. Sometimes the clients at their place use a different software which cannot be accessed from remote from the audit firm's office. It's advisable to also do what is called spot learning. Do interact with peers on the same audit. Yes, take inputs from the earlier team or peers if it is a continuous internal audit. Bring out your own skills and innovation, even if it is absolutely a new audit or routine audits. There are possibilities of bringing out if one is alert on newer avenues, innovations. Excuse me. Do have all updates on law on hand. It would be rather embarrassing if clients correct our knowledge on law. Hence, we should have an updated information of the latest. Do learn to reflect eloquently. Yes, some legal documents or commercial contracts may be cumbersome for understanding. However, learn the techniques to reflect upon them even on such occasions by referring to peers, proprietors, or partners. Do take care to enter into unknown terrains. Yes, this will be a bold step. Sometimes it is not a bad idea to take a short break for a brief time to refresh on the same audit if you feel very monotonous. Look for a change if possible and adjourn briefly and rejoin. Do check carefully the statutory compliances. Sometimes even increase in share capital would be missed out during audits. Look at statutory compliances very carefully and report mistakes boldly. Do pick up newer points. We have talked about that. Yes, Even on routine audits, one can innovate and bring out. Do focus on communications. Yes, it is rather very important in exchanging communications, both oral and written, with clients. Every outcome is based on this only. One should be strong in this. Do record times spent at every audit without fail. Most of the audit firms have a meticulous software to record time spent, fix costs, bring out the overruns on time spent and costs, etc. And they discuss this for either corrections or avoidance. The time measurements should be very meticulous and of utmost importance even for billings. Do measure your liabilities. Yes, internal auditor will be liable for any wrong reporting as the stakeholders rely on the assurance functions and reports given by the internal auditors. Now we have talked about the local so far. I'd like to touch upon the global aspects of internal audit. Is there anything that distinguishes local from global in internal audit? I would say big yes. In global, the distinction between local and global is in the art and science of conducting the internal audits efficiently and effectively with the best turnaround times and in reporting with adept communication skills. With my own experience in the South Asian countries as well as in the Middle East countries, where I have both appointed auditors as well as been doing the audits, I have come across certain specific points which I'm going to address in the next few slides. The global, clear pointers on audit scope and terms of references. Pre-agreed and fixed timelines, otherwise extra billings. They tell that upfront. Best turnarounds for the segments of audit. If there are several segments of audits and each segment is defined with certain specific timelines and the turnarounds are kept intact. Understanding and adaptable audit team with pre-training. This is one aspect which I have noticed in the global perspective. Updated knowledge with always a value-add focus on systems and processes. Process-driven environment rather than people-driven environment in international scale. Security of data and examination with SOPs, standard operating procedures. They have this all intact. Regular updates and discussions. Innovative models for discussions. This is also brought out many a time, which actually centralizes the whole internal audit program. Concurrent updations on compliances. Wherever there is a need to update on the compliances, they do it concurrently. Rarely there is any change of team assigned. Unlike in Indian conditions, there is no change as much as possible of the team assigned for internal audits. Peers interaction as frequently as possible for measuring progress on the audit assignments. That is also happening. Clear closure with timelines, otherwise extra billings. They don't hesitate to do this, not to define that. And of course, timely billings and collection, if not, reject, delay the audit. If the collection doesn't come in time, they don't accept audits. At least they point out very clearly. Now I would like to conclude this session at this stage by extending that the global trends on internal audits are growing through technology to keep pace with advancements. The technology plays a very major role on global audits. We are not much different in catching up with that pace, but we have to caution ourselves as our speed and velocity are insufficient and remains wanting. sooner we can hope to gear up to reach better heights on excellence in conducting such internal audits with technological upgradations. I would like to conclude here and also would like to throw open the floor for raising questions because it is a deeper subject and I am not touching upon any of the technicalities. Hence, I would like to invite questions relating to this. Thank you.
Thank you so much, sir, for such a wonderful session. But now we have no questions yet. Thank you so much, sir, for your valuable time for being here.
Thank you.
Now, I would like to introduce CA Amit Kumar ji, Chairman of Sonipat branch of NIRC of ICI, to give the vote of thanks and to conclude the remarks. With this, we have come to the end of today's knowledge enriching seminar. Now, I am handing over the stage to Mr. Amit.
Sorry, I am on the way to somewhere. Thank you, sir, Anil sir, for your wonderful session, and Arsa ma'am and Deep sir. In India of CA, CCM and Vice Chairman of IASB committee, I am given an opportunity to give vote of thanks. So, thank you, sir, thank you all for wonderful session and all the viewers who joined us for today. Thank you.
Thank you very much. Thanks a lot. Thanks,
Thank
Rina.
you, everyone.
Thank you.
Thanks,
Thank you, Anil sir. Thank you, everyone.
Thank you.
Thank you,
Thank you,
Nanda
sir.
Thank you.